Good evening, everybody. Mike Vacchi, PrincetonTrader.com here with your evening recap. Tuesday night, August the 20th, 2013. Okay, daily chart of the ES, and you see here, let me blow it up. You see the rectangle that we've been talking about for the last couple of weeks. It's the 38 to 50% retracement of the smaller move. That's the 1553 quarter move up to the 1705 highs. We traded down into that rectangle on the close yesterday, and in the Globex, we stayed in there this morning and we bounced out of it, which was not unexpected. We were expecting a bounce back to get within the Bollinger Bands. We did that, but this big yellow line here, the 50-day exponential moving average, held in any kind of rally that was going on today. We did highs 56.75, so we just really couldn't get up into that 58 area. Remember the overall thesis that we're using here. We knew we were going to bounce. I wouldn't even call this a bounce yet. The issue becomes, if this bounce gets some legs, what are the bulls going to do with it? Are they going to turn it into a V, where we head back up, forget about the middle band here, the green line, just keep on going? Or do we get a lower high? Whether that lower high could be in a few places, especially after today's price action. It could be here, in the area of the 50-day. It could be here at this fib, or it could be up here in the area of the middle band. Any three of these three scenarios is not a positive outcome for the bulls. So the bears are really they're in a good position. And I would argue they're in a better position than they were when the bottom fell out here. It's not on the heels of a Fed meeting. It's not incredibly accelerated, okay? It's been very orderly. You had some tight bands. We had a big down day, and then we traded in the channel between the third standard deviation and second standard deviation bands, and we've leveled off. You did not get violent day down, huge violent day down, price rejection, and a ripper. That's what this was, okay? That plays into the bulls' hands. What the bears want is an orderly decline. So what I'm thinking about tonight, and what I just got done telling my subscribers, is we need to be on the lookout for a ride of the lower band. That is a pretty foreign concept in this market. We have not seen a genuine lower Bollinger Band ride in years. We've seen a lot of upper Bollinger Band rides, but not a lot of lower Bollinger Band rides. So how does that work? Well, generally here's how it works. The market makes a high, either in Globex or in the morning. That high gets sold, and price reaches for that lower band. Right now, the lower band is at 1643. So we're talking about steady lower movement. That is one scenario. The other scenario is this bounce keeps heading up a little higher, trying to work a little bit of this off, and we see where the lower high is going to be. If that happens, then the bears have got to push their case and make a lower low. They cannot let the bulls take price up above the middle band. As long as we're trading between the middle band and the lower band, we are in sell rallies mode. That is sell rallies. If you're trading between the middle band and the upper band, and we're going to go over this in the webinar that Tony and I are doing tomorrow after the close, and there's a sign up link for that attached to this post, and there's also a link to sign up on the homepage of the website and on my Twitter page at Princeton Trader. From the middle band to the upper band is buy the dips. From the second standard deviation band to the third standard deviation band is generally buy the dips. That's a good old-fashioned close your eyes and buy. Or if it's doing it up here, it's a close your eyes and sell. From the middle band, though, to the lower band, this area in here That's sell rallies. Because a steady trade inside of this cycle is indicative of a weak market. So that's really where we are now. So we need to be cautious. We need to understand where the lows are. And on any significant pops, we need to be selling those rallies. And as far as the pivots go, there's nothing really instructive. We've got a double pivot area, 1649.5 to 1651.5. So generally where we're trading now, and that's a key zone. Whoever wins that zone will probably win the day tomorrow. Nothing significant with respect to economic numbers. You've got existing home sales at 10. You got the crude inventories at 10:30. The Fed minutes are at 2. People will be parsing through those, looking for taper talk and things like that. But it's not going to move it like a Fed meeting unless there's a real bombshell hidden in there, which I doubt very seriously, because if it was, it would have got leaked. So everybody have a fantastic night. I'll have a pre-market webcast out in the morning. Check out the website, check out the Twitter, sign up for the webinar. Look forward to seeing you tomorrow. There'll be plenty of opportunity to ask questions. It'll be about an hour long, so basically an hour to pick my brain, and it should be a lot of fun. Tony Rago and I, my partner over at Princeton Trader, we're really looking forward to it. Everybody have a fantastic night. Trade them well.